Welcome to the deep dive. Today, we're getting straight into Lockheed Martin, ticker LMT.
Right.
You've shared this comprehensive stock analysis report, and our goal really is just to pull out the key insights.
Right.
Help you understand if this aerospace and defense giant, well, if it looks like a compelling investment right now.
Exactly. No fluff, just the core stuff. We'll look at what the report says about, stock performance, financial health, growth prospects,
And the risks, too, of course.
and the risks, yes. The aim is a focused understanding, keeping it concise, impactful for you.
Okay, let's dive right in then. Current stock performance. The report has the last close at $462.08, up slightly that day, 0.82%.
hmm
And the 52-week range is pretty wide, $418.88 to almost $619.
Yeah, that range shows some movement over the year.
Hmm.
But what's particularly interesting is how that close price compares to value estimates.
Okay.
Well, the report pegs the fair value at $481.93, so a bit above where it closed.
Right, a little bit of implied upside there.
And even more significant, maybe, is the average analyst price target over the last 6 months. That's sitting at $561.90.
Wow, okay. So analysts, on average, see considerably more potential there compared to the current price or even the reported fair value.
That's the suggestion, yes. A potential disconnect worth noting.
So despite maybe some ups and downs in the stock price itself, there's a feeling it might be, well, undervalued. Let's shift to their financials then. How did they do in the first quarter of 2025?
Pretty solid, actually. Sales were up 4% compared to last year, hit $18 billion.
That's a decent jump. And earnings.
Even better on that front. JAP earnings per share, that's the standardized profit measure, rose quite significantly, 14%, up to $7.28 per share.
14%, okay. And cash flow, that's always critical.
Absolutely. They generated $955 million in free cash flow just in Q1. And free cash flow, just to remind you, is basically the cash left over after they pay for operations and investments.
Yeah.
It's cash they can use for, dividends, buybacks, paying down debt.
Nearly $1 billion in cash generated in 3 months. That's strong.
It is. And it seems to give them confidence for the rest of 2025.
Ah, so they reaffirmed their guidance for the full year.
They did. Still projecting mid-single-digit sales growth. They're aiming for a segment operating margin around 11%.
Okay.
And targeting $6.7 billion in free cash flow for the whole year. So that Q1 performance looks like a good start towards that goal.
Right. Consistent growth, good margins, strong cash generation. Seems like a healthy picture.
And a big part of why they can maintain this, according to the report, is their wide economic moat.
Ah, the moat. Always important. Let's unpack that. What gives Lockheed Martin its competitive edge?
Well, it really boiled down to a couple of key things. First, their intangible assets. Think decades of R&D poured into these incredibly complex, proven systems.
Mm.
The F-35 MFC missiles, the Fleet Ballistic Missile Program.
Stuff that's very hard, very expensive for anyone else to replicate.
Exactly. And second, high customer switching costs. Once a military force, usually a government, integrates Lockheed systems deeply into their defense infrastructure, switching becomes a massive headache. It's disruptive, hugely expensive.
You can't just swap out your fighter jets or missile defense overnight.
Precisely. And tied to that is their backlog. It's huge, $173 billion.
Wow.
That gives them visibility on revenue for, well, over 2 years based on current sales levels.
That's some serious predictability. Okay, so that covers the present and near term. What about future growth drivers? The report mentioned something called the 21st Century Security Strategy.
Yeah, that's their big picture vision. It's not just about the hardware anymore. It's about integrating that hardware, the planes, the missiles, the ships, with advanced digital technologies.
Like AI, 5G.
Exactly. AI, 5G, distributed cloud. The goal is to create networked, integrated solutions that offer much greater capability. Think less about individual platforms and more about the connected system.
Makes sense. Any specific examples of this?
The report mentions the Golden Dome for America concept. It's envisioned as this layered network defense system. That's a very long-term, ambitious project, but it shows the direction.
Okay. And beyond that big strategy, what other growth areas are highlighted?
Several specific programs look promising for growth beyond 2025. There's strong demand mentioned for their MFC missile programs. The Fleet Ballistic Missile, or FBM program, could see double-digit compound annual growth. Yeah, CAGR.
Double digits, okay.
Then you have the Next Generation Interceptor, NGI. That's a big one. The CH-53K King Stallion helicopter is getting close to full-rate production.
Right.
And don't forget the F-35. Even though the plane itself is mature, the sustainment and modernization work upgrading it to what they call 5th Generation Plus is a huge ongoing revenue stream.
So new programs coming online and extending the life and capability of existing ones. Any mention of space?
Briefly, yes. They touched on new satellite capabilities like the LM-400 platform. Got it. Lots of potential growth areas. But no company operates without risks. What are the main challenges or headwinds mentioned in the report for Lockheed?
Well, one significant one was the NGAD program, Next Generation Air Dominance. They weren't selected for the prime contract.
That must have been a blow. How are they responding?
The report suggests a strategic pivot. They plan to take technologies developed for NGAD and use them to enhance their existing platforms, especially the F-35, kind of a make the best even better approach.
Interesting. Turning a setback into an upgrade path for their flagship product. What else?
Potential tariff headwinds are mentioned, though they apparently have mitigation strategies in place. The space segment did see sales dip year over year in Q1, and they had lower equity earnings from their ULA joint venture.
Okay, so space had a weaker quarter.
Yeah. And supply chain constraints are always a background worry in this industry, things like rare earth metals. But the report states Lockheed doesn't expect these to materially impact their 2025 delivery commitments. They seem to have alternate sources and stockpiles. Good to hear they feel prepared on that front. Okay, so we've covered performance, growth, risks. What about shareholder value? How does Lockheed treat its investors?
Very well, based on this report. They're clearly committed to returning cash. In just Q1 2025, they returned over $1.5 billion through both dividends and share repurchases.
$1.5 billion in one quarter.
And the plan is even bigger long term. They aim to return at least $18 billion over the next 3 years.
18 billion, that's substantial. And the dividend itself.
The current annual dividend is $12.90 per share. Back in early March, that translated to a dividend yield of about 2.79%. Solid income stream for shareholders.
Definitely a key point for income investors.
Hmm.
Now, you mentioned analyst price targets earlier. What's the broader analyst sentiment? Are they mostly positive, negative, mixed?
It's definitely mixed, which isn't surprising for such a large, complex company. The report outlines the bull and bear cases pretty clearly.
Okay, give us the highlights. What are the bulls focusing on?
Bulls love the robust backlog we discussed. That premier portfolio of defense tech, the strategic pivot towards digital security seems smart to them. They see clear long-term growth drivers, the strong financials, and of course the shareholder returns.
Makes sense. And the bears, what are their concerns?
Bears worry about program setbacks, like losing NGAD. They highlight execution risks on complex upgrades, like getting the F-35 TR-3 tech refresh stable and delivered. There are also concerns about those broader supply chain and geopolitical headwinds, the company's dependence on government budgets, which can fluctuate.
Right, defense spending cycles.
Exactly. And also the challenge of adapting quickly enough, especially with potentially more agile, tech-focused competitors maybe emerging in certain areas.
So valid points on both sides. Did the report mention any specific recent analyst actions just to illustrate the differing views?
Yes, it did list a few recent ones.
Yeah.
RBC Capital issued a downgrade, but Wells Fargo actually raised their price target. Baird and Bernstein both lowered their targets slightly, all within the last couple of months.
See, all over the place. It really shows you need to dig into the why behind the ratings, not just the rating itself.
Absolutely. You need to understand the reasoning.
Okay, last piece here. Maybe some key financial figures, looking at annual trends.
Sure. The general trend projected is for continued revenue growth in the coming years. The current price to earnings, or PE ratio, is around 19.68. The forward PE, which uses expected earnings, is lower, about 16.97.
Suggesting earnings are expected to grow faster than the stock price, maybe?
That's what a lower forward PE typically implies, yes. And just to reiterate the cash flow point, free cash flow was nearly $5 billion last fiscal year, and as we said, projected to hit about $6.75 billion this year. That reinforces the financial health picture.
Okay, so let's try to wrap this up. In a nutshell, Lockheed Martin. It looks like a company performing well right now, right? Strong financials, huge backlog, providing some stability.
Definitely. And promising growth areas driven both by, ongoing defense needs and this strategic shift towards digital integration. That seems key.
But investors definitely need to weigh the risks. Competitive pressures, the NGAD law shows they don't win everything, execution risks on big projects.
Right. And the reliance on government spending is always there. But that commitment to shareholder returns is also a very significant positive factor for many.
So maybe a provocative thought to leave you with. Considering this big push towards integrated digital defense and just the general global security situation, how might this strategic pivot by Lockheed really reshape its dominance long term?
That's the multi-billion-dollar question, isn't it? Will they leverage their incumbent strength successfully in this new digital era? Or could we see new types of competitors, maybe more software-focused players, start to chip away at their position? How well placed is LMT to truly adapt and lead here?
Something definitely worth mulling over. Okay, we really hope this focused deep dive is giving you a clearer picture of Lockheed Martin's investment profile.
Yeah, hopefully it cuts through some of the noise. There's always more detail, of course, but this covers the key points from the analysis.
We certainly encourage you to explore any areas that particularly sparked your interest further.
Mm-hmm.
And if you found this focused analysis valuable, if you want to stay informed on other key investments and get these kinds of in-depth insights, please do subscribe to our channel.
And hitting that bell icon helps too, so you get notified.
It really does. Your support is what lets us keep bringing you these deep dives into the topics that matter to you. Thanks for tuning in.